Okay, good afternoon, students of taxation. This is the continuation of our deduction on our discussion on deductions from gross income. Okay, so last two videos we have already discussed OSD and some examples of itemized deduction. So we are on the net operating loss carryover, or what we called or commonly known as NOLCO. Wait. So we have NOLCO, or the net operating loss carryover. Okay, so it is the excess of the allowable deduction over gross income of the business or enterprise for any taxable year. So in short, the computation of your gross income less itemized deduction resulted into a negative or an operating loss. So that's why it is called as net operating loss carryover, because our tax laws consider it as a credit to your subsequent income. Okay? So you can deduct this NOLCO on the income for the subsequent years. Okay? Since the tax laws grant some credit if the company is suffering losses. Okay? Suffering losses. That's why the after the recovery of the business, the losses ng experience on the previous years are allowed to be deducted on the years that the company is generating income. Okay? So, a net operating loss in a taxable years 2020 and 2021 will be carried over and deducted from gross income for the next 5 years following such years of loss. So, therefore, if the loss incurred or suffered on the year 2020 and subsequent, it can be claimed for a years for subsequently for 5 consecutive years. So therefore, if you have lost experience in 2022, you can claim it up until 2025. So if the loss was not consummated or used within the 5-year period, so your NOLCO will be expired. Your NOLCO for 2022, sorry, your NOLCO for 2020 will be expired at the end of year 2025. So that is according to the Create Law. Before the implementation of Create Law, NOLCO is only available for 3 years. So a net operating loss prior to 2020 can be carried over to 3 years following the year of the net operating loss. So there may be two carryovers. One, net operating loss prior to 2020, and another is net operating loss from 2020 and or subsequent years. So guys, you have to consider that every year, if the company is suffering losses, like for example in 2020, 2021, and 2022, so you will have a net NOLCO for year 2020, you will still have a NOLCO for year 2021, and you will have as well as NOLCO for year 2022. So, nag-pile up na siya guys kung every year nag-suffer ka losses. Nag-pile up na siya. So, ang mga NOLCO nga na realize mo for those years operating at a loss will be considered as credit on the subsequent years. But there is an expiration. So the expiration would be 5 years. Okay? After 5 years, if your net operating loss was not consummated or used, it will no longer be available. For example, your year 2020 NOLCO will not be available for year 2026 because it will going to expire at the end of year 2025. Okay? So illustration, we have your NOLCO. So OLAT Corporation had the following data on income and expenses for the taxable year. So income, taxable is 500,000. Then non-taxable is 400,000. So the expenses, so these are given information, is deductible expenses is 600,000 and non-deductible expenses is 100. Okay? So the computation, the books of accounts reflects a net operating income. Thus, total income is 900. So that's 500 plus 400 is equals to 900. Then we have your total expenses of 700. So that's 600 plus 100 is equals to 700. Okay? So the income tax computation shows, so for income tax purposes, your taxable gross, which is given, 500, that's 500. Then less your deductible expenses, which is 600. Okay? So therefore, based on the computation, on the year 2020, the company or OLAT Corporation suffered a net operating loss, which is 100,000. So this is the net operating loss. So the question is, for the year 2020, does OLAT Corporation need to pay income taxes? So the answer is a quick no. Because as you can see, there is no taxable income. Instead, the result is a negative or a loss. So it's very inhumane or very inconsiderate for a state or for our government to collect taxes even though the company is not earning a profit. Okay? So this is the illustration on how to apply or how to use your NOLCO. So we have your net operating income for the year, that's 2020. So zero, of course, and as based on our computation earlier, the company suffered a net operating loss of 100,000. So of course, there's no given information that there is a net operating loss carryover prior to 2020. So there's zero. So the taxable income would be zero. Okay? So our concern is the subsequent years. For 2021, the company is gaining profit or naka-recover, is recovering from the loss on 2020, and it was provided that there is a net income for the year of 40,000. Okay? So of course, the year 2021, take note that previous year, which is year 2020, there is a loss of 100. So this loss of 100 can be used as deduction to the net income of the subsequent years up to 5 years, remember? So it will benefit 2021, 2022, 2023, 2024, and 2025, of course, kung may subpon pa na di. So up to 2025 pa ang validity sa aton nga 100,000. But based on our illustration, on the year 2021, we have already used the portion of your 100,000, which is equivalent to 40,000. So for the year 2021, even though the company has a profit of 40, but the taxable income will be zero because portion of our loss on 2020 will be used against the net income of for 2021. So that's resulted for a zero taxable income, and therefore there is no income tax due for 2021. So for 2022, subsequently, the company is keep on recovering. So the company is earning net income of 30,000. So since our net operating loss of 100 and 40,000 of which was already used in 2022. So therefore, 100,000 minus 40, we still have a net operating loss of 60,000. So therefore, we can avail the portion of your net income, which is 30,000, because we still have enough NOLCO to cover the 30,000 net income. So that's why we have to deduct 30,000. Then, even though, again, on the year 2022 has a net profit, but because of NOLCO, our taxable income is reduced to zero. So therefore, on the year 2022, OLAT Corporation need not pay what we call um, net operating loss carryover. Sorry, need not to pay income tax due because the taxable income is of course zero. Remember? Next, for the year 2023, that's 20,000. Amo ni ang na-earn ni OLAT for the year 2023. Take note guys, we have to maintain a separate ledger for your NOLCO in order to monitor kung pila na ang bilin sa NOLCO naton. But since the illustration is very simple, we don't need to maintain a ledger for the meantime. Okay? So we have your 100,000, your NOLCO. Then 40 was used in 2021. Then 2022 availed 30,000. So therefore, we still have 70 minus 40 minus 30. We still have 30,000. We still have available na 30,000 for the year 2020 that can be offset from the net income. Okay? So 20,000 less 20,000 nga portion sa NOLCO we have is zero taxable income for 2023. So for the year 2023, all that corporation is not liable to pay income tax due. Although, there is a net income of 20 but it was offsetted with the available balance of the net operating loss carryover which was recognized or incurred in year 2020. Okay? So, next, on the subsequent year, year 2024, we have the company realize a net profit of 60,000 or net income 60,000 for the year 2024. Then, again, the same explanation, we have to check the available balance of your NOLCO. So that's 100 and it was used on the year 2021, 2022, and 2023 for a total of 90,000. That's 40 plus 30 plus 20, that's 90,000 less the 100 na original NOLCO which was incurred in 2020. So, in short, the difference or the available balance of our NOLCO is only 10,000. So, for the year 2024, all that corporation will be liable to pay income tax due using the graduated, will be liable to pay a 30% nga income tax for corporation based on the taxable income of 50,000. Okay? So, if ever nga may bilin pa guys, ang aton nga net operating loss, your net operating loss nga 100 can be used up to year 2025. But in our case, in our illustration, it was already fully consummated. Nagamit na siya. Okay? So therefore, on year 2025, wala na tasang NOLCO nga pagka-istoryahan. Okay? So, if ever that, for example, on the year 2021, instead of profit on the year 2021, the OLAT Corporation still suffered a loss. So, let's imagine that this 40,000 is not net income. Instead, it is an operating loss. So, in short, for your year 2022, you can use your NOLCO of 100 and another NOLCO of 40,000. You don't have to sum up or i-add ang aton yan negative 100 kag negative 40. Okay? Based on another illustration, hindi mo na kailangan i-add because they are separate. Why? Nga kailangan mo siya separate because your NOLCO for 2022 will be available up to year 2025. So your NOLCO nga na-realize on the year 2021 will be used up to year 2026. In short, they have different due dates. They have different period nga available for use. Okay? Because of the 5-year period. So 2020, if ever this 40,000 is a net operating loss, though, so we have a NOLCO of negative 40, so your negative 40 will be used for 5 years. Remember? You will be used for 5 years. So it can be allowed or it can be utilized to offset to the net income from year 2022, 2023, 2024, 2025, and 2026, and so on. Okay? So you can eliminate your NOLCO in two ways. One is full consumption of your NOLCO or full utilization of your NOLCO or expiration of your NOLCO. Since the NOLCO is only good for utilization or offsetting for a period of 5 years. And our margin year is 2020, since if there is NOLCO prior to 2020, you have to consider it also. If ever the problem shows that there is a NOLCO on the year prior to 2022, so you still going to consider your NOLCO kung may ara man sa prior years. And take note, ang prior year's NOLCO is only good for 3 years. Okay? So for 2020 and subsequent, as long as the law is not repealed yet, we will use a 5-year period for net operating loss carryover. Okay, so that is NOLCO. So the net operating loss of 2020 can be carried over up to year 2025, as I mentioned earlier. So each year of net operating loss will have its own net operating loss carryover. So hindi mo pag i-add kung may mga gasunod-sunod ang net operating loss, you have to identify on which year it is or it was incurred. Okay? Separately per year ang NOLCO natin. So in short, we have a NOLCO 2020, NOLCO 2021, or NOLCO 2022. And so on, kung ga-continue ang losses niya, so ga-pile up lang ng NOLCO yan. Okay? So actually guys, NOLCO was provided by our tax laws to give credits for company who is suffering losses. Okay? Para it's like a tax credit, or it's like a tax holiday for those company who are unfortunately is earning losses, para hindi man sila matamaan sa pagbayad sa tax, because you cannot tax a taxpayer if he is not earning income. Take note, the term of our taxation is income taxation. So wala sang hindi man applicable ang term nga loss taxation, di ba? As the case may be. So it is not loss taxation. Take note, it is income taxation. That's why if you are continuing suffering losses, so you can avail that as a credit if the subsequent year will result to a recovering net income. Okay? Next, we have your bad debts. Bad debts. So the requisites for deductibility, first, it should be connected with the trade or business of or profession. So take note guys, in our part 1, we have already discussed those related party transaction. So remember the rule of related party transaction. So for deductions, losses, so what are the related party deduction? So these are transactions between related parties, brothers, family members, between trust and the beneficiary and the trust kag fiduciary. So those was kindly review the part 1 because it was already discussed on deduction from gross income part 1. Okay? So take note or remember the rule of related party for bad debts, losses, ano ba to? Losses and interest expense. Please remember the related party transaction. Because if the bad debts was incurred as a result of a related party transaction, so that particular amount of bad debts cannot be deducted from the gross income of the taxpayer. Okay? Second, it was actually ascertained to be worthless. So there is a greater probability that the amount cannot be collected anymore. Third, charge off within the taxable year. So remove from the books of account by an adjusting entry. So I know that you have already experienced doing adjusting entries. So the rule is you have to remove it in the books of accounts para maging deductible siya. Okay, so an account is proved to be worthless if when it is ascertained that there is with a reasonable degree of certainty that the amount is uncollectible. There must be no likelihood or recovery at any time in the future. The taxpayer must have taken reasonable steps to collect the debt, although there is no need to go to the court if legal action, in all probability, will not result in the satisfaction or execution of judgment. So actually, guys, the question arises, what if you have already considered it as a worthless account or a bad debt expense, and it was already deducted from the gross income on that particular year? What if subsequently your debtor paid the account actually declared as worthless? So the answer would be it will be considered as a other income, taxable other income. So dito na siya sa babaw, hindi mo na siya pwede ma-claim or hindi mo na ma-revert dapat ang imo mga expenses sa prior year because it was already concluded. So on that particular year of collection, you will consider it as other taxable income. Okay. So indication of worthlessness of the debt, flight or disappearance of the debtor. So nalagyo ang ato nga debtor. Insolvency of the debtor, except if there is a solvent guarantor or surety. So the debtor is declared as insolvent by the court. So therefore, tanan nga asset na sang debtor will be distributed to the creditor of the insolvent debtor under the order provided by law. So I believe, if I'm not mistaken, the order would be, the first priority would be the government, second, the employees, third, persons, those persons who have liens, may mga liens. Actually, it was discussed in advanced accounting on corporate liquidation. So, kindly review your advanced accounting. Okay? So, these are indication of worthlessness. If ever that you are the creditor and you receive nothing from your insolvent debtor, so of course, your account can be considered as worthless and it can be deducted against your gross income for the purpose of the computation of income tax due. Okay? Third, death of the debtor. So, it can be considered as an abuloy na lang on the part of your debtor. Okay? Death of the debtor will with insufficient properties to pay its creditor. Actually, guys, the manner of distributing the property of number 1 and number 2 is most likely the same. Instead lang sa number 1, number 2, ng the owner is alive. The third one is through succession na siya, guys. Okay? So, bayaran na, prioritize na ang mga properties sa creditoria. Okay? So, if the properties of the debtor is insufficient to pay all its creditors, so therefore, your account can be declared as worthless and it can be deducted from the gross income which is subject to tax. In case there is a property mortgage, the value of the property foreclosed will be deducted to the value of the receivables provided to be worthless, and the difference is the amount to be deducted in the gross income of the taxpayer. In case your account is assured by a lien on the property of the debtor, so you can foreclose the property. But if ever that the account is more than the value of the property, the difference is considered as bad debts and you can deduct it from your gross income subject to tax. Okay, so the accounting for worthless account. Actually, our accounting standards allowed two methods. We have your allowance method and direct write-off method. it was discussed in your financial accounting. But for the purpose of taxation, I'm going to review what the accounting or the journal entries on both methods allowed by the accounting standard. Okay? For taxation purposes, it was also allowed by the tax laws. Whether you use allowance method or direct write-off method, it doesn't matter for tax purposes. Okay? So let's compare the two methods. So for allowance method, you are providing an allowance for bad debts. It is a matter of policy on your company or on your business kung mag-provide ng allowance. So the entry would be debit bad debt expense and allowance for bad debts. So for allowance method, for the purpose of computing taxation, we will not deduct your bad debts expense under allowance method, guys, for 20,000. This amount is cannot be deducted because it is just an allowance. Okay? It is just an allowance. So, you can deduct if it was what do you call that, if it was reverted, sorry, if it was removed from your books of accounts. Okay, so under this entry, under allowance method, wala mo paging remove ang imo nga o bad debts. Instead, nag-provide ka lang allowance. So, wala ka na rin dapat expense which is deductible from your gross income. But in accounting, yes, you have a bad debt expense. But in taxation, this is not yet deductible. Okay? So, for direct write-off, since it is direct write-off, we are not providing allowance for bad debts. So, there's no journal entry for direct write-off. Though straightforward niya ang direct write-off. Okay? So, hindi tayo mag-record entry kung hindi magitutuon ng bad debt na siya. Okay, sige. So, next, the allowance method for on the year 2021, 10,000 of the accounts receivable is proved to be worthless. Proved again, proved to be worthless. So the entry would be you have to remove the allowance portion against the accounts receivable. So it is credited. The accounts receivable is credited. So if you have a loan of let's say 50,000, so 10,000 ang na-prove na hindi na makolekta, so therefore it is no longer accounts receivable. So dapat i-remove mo na siya by crediting accounts receivable 10,000. So in this period, in this time, your worthless is proven, then the amount of 10,000 can be deducted from your gross income subject to tax. The same is true with direct write-off. I'm sorry, nadula ang ano guys ha, ang credit ng accounts receivable dili. So the entry for direct write-off method would be bad debt expense 10,000, credit accounts receivable 10,000. So the same effect whether allowance method or direct method ang gamiton naton with regards to accounts receivable. Your accounts receivable was reduced by the amount which is proven to be worthless, which is 10,000. Okay? Ay, galing. Which is proven 10,000. For tax purpose, both accounting method, recognition of bad debt should be in the year it becomes worthless. So it is on the year 2021. It is on the year 2021 and not on the year 2020. So the problem arises lang guys, or the confusion arises lang if the taxpayer uses allowance method. So there's no problem if the taxpayer uses direct write-off. Please take note lang, actually the main landmark lang din nato nga tanawon is that at that time that you have credited your accounts receivable. Sang nag-credit ka na sang accounts receivable by by write-off, through write-off. Nag-credit ka account receivable through write-off. Okay? Ang mula natandaan nyo nga year when it becomes worthless. Thus, it should be deducted in the year 2021 for both allowance method and direct write-off method. Okay, so let's go now to another itemized deduction, which is depreciation and amortization. Okay? It is a reasonable allowance for the exhaustion, wear and tear, including a reasonable allowance for obsolescence or pagka-outdated. When we say obsolescence, that is tantamount to outdated, of property used or temporary not used in the trade or business. Take note guys, if the property is used or not used or standby mode siya, still it will suffer wear and tear, or it will be subject to obsolescence or obsolete or outdated. So therefore, it is proper to charge a depreciation in the case of tangible asset and amortization in case of intangible asset. Okay? The necessity of depreciation allowance arises from the fact that certain properties used in the trade or business gradually approach a point where their usefulness is terminated. So it is both tangible property and intangible property. Okay? So the reasons why the accounting standards allow for what we call depreciation and amortization is an allowance for the wear and tear and pagka-outdated or obsolescence or obsolete some property. Okay? Take note. Methods of depreciation. So it was discussed thoroughly in our financial accounting in property, plant, and equipment. But we in the for the purpose of taxation, we're going to review the methods of depreciation. These methods was allowed by the tax laws as method in computing depreciation that can be deducted, which is the basis for the deduction from our gross income subject to tax. First is straight line method. So as a review, straight line method is the formula would be cost less salvage value, which is equal to depreciable cost divided by the estimated useful life, and that would be your depreciation for the year. Okay? Straight line method. Then we have your declining balance method. So when we say declining balance method, guys, every year, uh, every year, the balance of your depreciation is declining, nagapanaog, because of the reason nga on the early years, the equipment is not yet old enough to suffer ng wear and tear. Unlike on the year nga lawig na siya nag-exist. Like for example, on the first year, sang declining balance or sang imong equipment, it will it is proper nga ang depreciation is lesser on the first year of operation sa aton nga equipment compared to the condition of the equipment after 5 years. So in short, mas gamay ang depreciation on the first year compared to the depreciation all after 5 years. That is your declining balance method, and it is also accepted or allowed by our tax laws in order for the computation of depreciation. Third, sum of the years digest method. So may factor na din siya guys yung ginagamit. And the effect of sum of the years digest method and declining balance method is almost the same. On the early years sa ating depreciation, your SYD or sum of the years digest will receive a lesser depreciation compared to the years nga nagamit na siya. Okay? So that is your sum of the years digest method, and we will no longer discuss how to compute your depreciation using the above the mentioned depreciation method. Okay? Next, we have any other method which may be prescribed by the Secretary of Finance upon the recommendation of the Commissioner of the Internal Revenue. So take note, the taxpayer should enter an agreement in writing. So actually guys, in your financial accounting on property, plant, and equipment, there are lots of methods, especially in cost accounting, on how to compute for your depreciation. So we have uh, units of operation method, may na sa. So depende sa operation niya kung pila ang, like for example, if the machinery is expected to produce 1,000 pencil, so your depreciation will be based on the unit sa production. So I forgot the exact name of the method. So you have to divide the value of your the depreciable cost of your equipment with the number of expected output nga ma-generate sa sinang equipment. So every time, so gina-compute guys kung pila ka equipment, pila ka pencil or pila ka output ang ma-generate sa isa ka machinery for that particular year and multiply it by the depreciation rate based on the estimated amount of estimated output na na-generate niya. In my example, that's 1,000. So, if that is the case, you will you will uh, you will enter an agreement with the commissioner of the BIR that that is your method of depreciation. Okay? Subsequently, if it develops that the useful life of the depreciable property will be longer or shorter than the original life, since take note, the life is just an estimate. So, maybe, kung hanggang short ang estimate, so you are allowed to extend or shorten the life of your previously depreciated nga property, plant, and equipment. Okay? So, actually guys, the tax laws on depreciation honors the rules or the accounting standards on property, plant, and equipment. So, actually, the term or this one is a manifestation that the tax laws is uh, honoring what the accounting standard says. So it develops that the useful life of the depreciable property will be longer or shorter than the original useful life. The portion of the cost of property not already provided for true depreciation allowance will be spread over the remaining useful life of the property. It was discussed in your financial accounting. Okay? So, in short lang guys, like for example, if the property is originally estimated that it will have a useful life of 5 years, okay? Then after 10 years, the management considered that the property can be useful for up to 10 years, okay? So obviously guys, from the revised estimated useful life of 10 years, 3 years of it was already used or was already computed. So the remaining life, ano na balya? The remaining or the portion of the cost of property not already provided or ang bilin or ang ato nga book value at the time of the revision of the estimation will be divided through a depreciation allowance that would be spread over the remaining useful life. In short, the book value at that time or after 3 years, since after 3 years pa nag-change siyang estimate, di ba? So this is just an accounting estimate, change in accounting estimate. So the remaining life, the book value of the property after 3 years will be spread over to the remaining useful life of the property. So kanina 5 to, 'di ba? So nagamit na ang 3 years. So ging change ang 5 years into 10 years. So pila na nga years ang na-consume? 3. So in short, the remaining book value will be divided or will be spread over to the remaining 7 years useful life of the property. Okay? So actually, this provision is for the accounting estimate, change in accounting estimate. Okay. Depletion. Depletion is a peculiar to mining. The natural resources were called as wasting asset. So when we the word depletion comes from the root word deplete or gakaubos. That's why the assets related to depletion is called wasting assets. So, a natural resources nga limited. Okay? Hindi renewable. Okay? As the physical unit represents such resources are extracted, ging sagob, ging ubos, ging kuha, ging mine, ging withdraw, and sold, such assets move towards exhaustion, gakaubos. Okay, gakaubos. When the total deduction for depletion equal the capital invested, no further deduction will be allowed. Okay? So actually, the depletion depends on the capital investments or the value of the property kag ang value sang land and any other property in relation to mining. So kung nagbakal ka bukid, kag ang depletion mo is equivalent to the capital invested sa pagbakal mo sang bukid nga ginasuspect nga may gold reserve, so there is no further deduction allowed because naubos mo na ang value sang imo nga gibakal nga property, which is ang bukid, which is suspected that has a gold deposit. Okay? So buildings and structures with limited life within the mine site will recognize as depreciation and not depletion. So if there are building and structures naging patukod within the mountain naging bakal sang company which is suspected to have a gold deposit, so it will be recognized as a depreciation, not depletion. Okay? So, ang depletion lang is on the value of the investments. Like, for example, ang value sang bukid, ang pila ka hectares ng bakal, kag gingkot-kot sang aton nga mining company. That would be the basis of your depletion. So, illustration. Land containing natural resources in the municipality of Kalayaan Island, Palawan, situated in the West Philippine Sea, or the Philippine has which the Philippine has full sovereignty and no other countries can claim to it. It was purchased by a Filipino with the authority of the Republic of the Philippines in the amount of 100,900,000. It was estimated that the land after exploitation of its natural resources will have a value of 900. So the property itself after restoration, after extraction of the suspected natural resources, it will cost only 900,000. So this will be the residual value of the property naging purchase ni Filipino. Okay? It was estimated that the natural resources was 5 million tons. Okay? Maybe ang fuel reserve dito is 5 million tons. If the withdrawal of resources from the land in 2020 was 500,000 tons, how much was the deduction for the year? Pila ano aton nga depreciation for the year? So the computation will be the purchase price, that's 100,900,000, less the residual value of the land, that's 900,000. Then the difference would be the depletion base or the depletable cost. The term is depletable cost or depletion base. Then divided by the estimated supply in tons. So the 5 million nga tons of estimated natural resources is also an accounting estimate. Just like the estimated life sa depreciation, it is an accounting estimate. So later, after years of research or extraction, pwede ni siya maging change. Pwede ni ma-change ang accounting estimate. Okay? Just like depreciation. Okay, so the depletion rate per ton is 20 peso. Okay? So for the depletion for 2020, it is 5,000 tons, which is the actual extraction or the actual extracted natural resources in the land in 2020 multiplied by the computed depletion rate of 20 peso. So the depletion for 2020 is 10 million pesos. Okay? The depletion is 10 million pesos. So the 10 million pesos is a deductible depletion. So you can deduct the amount of 10 million from the gross income of the mining company, which is subject to tax. Okay? So if there are buildings in the mine site and there are no mining operation, there will be depreciation of the building, which will be allowed as deduction from gross income. So guys, like for example, in year 2021, it was the operation was canceled or temporarily stopped. So there is no depletion for the year 2021. But in case of buildings, structures within the Kalayaan Island in Palawan, so you can claim depreciation on the wear and tear of the buildings in the mine site, even though there is no depletion, because depletion is based on the actual extraction of the natural resources. So kung wala ka operation, so of course there's no depletion, but for those structures within the mine site, it will be subjected to depreciation. So for the year 2021, you can claim depreciation as a deduction from gross income of the taxpayer. Okay? Next, research cost. Research and development costs are for improvements of processes and formulas, as well as the development of improved or new products. Okay? So I believe you can imagine what is the purpose of research and development costs. There are for the acquisition or improvement of property subject to depreciation or depletion. Okay? So example, in our previous illustration, before na guys, naging bakal ang property sa Kalayaan Island worth 100,900,000. There are certain or multiple research activity. Okay? So, ginapasurvey mo ang barko, gamit ang mga technology nga para mabalaan kung may reserve man sa Kalayaan Island, antes mo siya baklon. So that is the composition of your research cost. So take note, ang mga ginambalya nga, the property subject to depreciation or depletion. Like for example, another one, if your company is focuses on innovation, like for example, if your company is creating air condition nga wala gagamit electricity from the grid, instead gagamit lang function siya because of hot weather, or gina-convert yung hot weather into cold air. So that's innovation. That kind of innovation was a result of research. So the cost of research and development uh, will be part of your operating expenses. Okay? So the question here is how to treat your research cost. Paano mo siya i-treat for tax purposes? Okay? So let's continue. So use in research and development becomes part of the cost of the asset if the research is successful and it become part of the asset. So it will be deduction through depreciation. So if the research, ang mga seismograph, ang mga barko nga ginabalibot mo sa Kalayaan Island, kag nag-decide ka nga baklon mo ang property because your research prove that there is mineral reserve under Kalayaan Island. So the value of your research cost will form part of the value of your capital invested dito. So in that case, it will be amortized or pwede mo siya magamit within the years nag-ooperate ang imong company through depletion. Okay? So in case may research ka, ang research mo i-add mo di sa value sang imong purchase price. Okay? So purchase price plus research cost, butang ta another 1 million. So ma-plus 1 million ka de. Then less residual value, that is your depletable cost. That's 101 million. Then divide by the estimated supply in tons. Your depletion rate of course will change and multiply it to the actual natural resources extracted, and that is your depletion for the year 2020 kung may research cost. Okay? Yung mga ginambalya. So if your research cost was part of the cost of your assets, so it will be subject to depreciation. Okay? So guys, aside from the treatment of R&D as part of your depreciation or depletion, are aside ka no, as part of your depreciation or depletion, so wala to siya kagina explain ko, your R&D may be treated in either of the two ways. First, as an outright deduction. So, full expenditures in the year that the expense was paid or incurred. So therefore, guys, if your R&D resulted into a negative, so, kung nag-survey ka sa Calayan Island, kag nakita mo nga wala gali mineral, wala to gali natural resources reserve sa Calayan Island, so gi-cancel mo ang pagbakal sang property. But nakagasto ka na sa research, di ba? So, ang research in that case, pwede mo na siya ma-deduct as an outright deduction on the year that you have conducted the research. That is what we call outright deduction. That's letter A. Or, as deferred expense. So, kung tama, ikada ko ang research and development cost mo, kag pwede, kag tama, ka negative, so, mabal mo inol ko, kung man na siya Japon, kung i-outright deduction ko siya. So, you can apply for, or you can treat it, or you can treat the research and development cost as a deferred expense to be spread and recognized as deduction for a period of not less than 6 months lang galing. 60 months, or pila na siya ka, 60 months man. 60 months divided by 12. So, at a period of 5 years. So, it's like NOLCO, di ba? 5 years man, di ba? So, ang mga deferred expenses for research development, you can deferred or amortize it for a period of 5 years or 6 months. Just like your net operating loss carryover. So, do parehas lang ang treatment, do null ko siya. So, if ever, nadako ang iyong mga research and development, kaging outright expense mo siya, kag the result of doing that is a loss, so your loss will benefit subsequent years for a period of 5 years. Just like letter B, 5 years man. Okay? So, uh, aside lang, yung tagaan ka option sang tax law. Either deduct in full, kung mag-negative ka man, you can still recover it through NOLCO, di ba? Or you can directly defer the expense for a period of 5 years or 6 months. Okay, so next, we have your pension trust. The peculiar rules on the deduction for the employer for pension payment to employees apply to pension plans that are refunded, take note refunded. An employee does not provide for pension for his employer in his initial year. So it is very logical. Sa early years ng pag-hire mo sa imong mga empleyado, natural hindi mo na siya na ipagitagaan provision for pension because it's too early pa para matagaan mo siya or maka-recognize ka sa allowance for pension sa iya. Because that particular employee may resign or may find some another job, di ba? So, there is logic behind why on the early years of your employee, you will not recognize pension trust in his initial years of operation. So, a pension plan is usually set up after some years of operation. Some is 10 years, some is 15 years. Depende na siya. It is just a matter of company policy. Kung pila ka tuig. When the employer can provide benefits to its employees. Since benefit from any pension plan consider the length of service. So this is the consideration in giving pension plans, the length of service of the employee. The plan must consider the services of the employees who were already with the employer even before the plan was set up. Ano nga malya? Kung nag-plan ka, like for example, your employee has a 10-year na service, dasun wala ka pa may set up na plan. So, after 15 years, you have decided that, as an employer, you have decided that you will set up a pension trust. So, ang years of service, which is 15 years, dapat i-consider mo na siya. Kumbaga, i-consider mo ang past services niya. Okay? Okay, so actually there are two considerations in pension trust. One is past service cost. So past service cost is lump sum payment to the pension fund. So when we say past service cost, kung tinambal ko, nang ang imo empleyado was already hired 15 years ago. So on her or his 15 years, dira ka pala nang set up sa pension trust. So ang 15 years siya na service na sa imo, na serbisyo na sa imo, dapat bayaran mo na sa imo mga pension fund. And that amount is considered past service cost. Okay? Next, we have your present service cost. After the pension plan was set up, after naka-set up ka sa pension plan, every year nga gadugay siya sa imo, dapat bayaran mo na sa pension trust. So in that case, the cost will be called as present service cost. Okay? So after pension plan was set up, there must be payment to the fund for the services rendered during the year by all of the employees. Hindi lang isa sa tanan mga employees. Okay? So, amo ng cost nga pwede mo ma-deduct your past service cost kag present service cost provided that the pension is not is refundable. Okay? If the pension is refundable. So, when we talk about pension trust, guys, these are payments to the trust, okay, in consideration of the pension benefit of your employee. Next, we have your entertainment, amusement, and recreation expense. Requisites for deductibility. So the requisites for deductibility first is directly connected to the development, management, and operation. The same rule sa ato yung general requisite for deductibility. Directly related furtherance of the trade or business. Then, of course, your entertainment, amusement, and recreation should not contrary to law, morals, public policy, or public order. Okay? So, that's very self-explanatory. So, hindi ka pwede kahatag sa mga expenses sa imo nga mga visitor or guest in furtherance of the trade or business which is considered illegal. Okay, number 4, does not exceed. So there's a limitation. That's number 4. Does not exceed from, if it is sale of goods, ang imo nga negosyo, 1/2% of net sale. That is your limitation. Therefore, you should not exceed the computed 1/2% of net sale. And for services, that's 1% of net revenue. Take note of the word net. Net. After sales return in allowance. Okay? After ng sales allowance or discount. Okay? That's 1/2% for goods and 1% for services. Okay, expenses under lease agreement. Okay. So in addition to the periodic payments made by the lessee to the lessor for the use of the latter's property, so the lessee may some other payments for which the deduction may be taken. Letter A, we have your lease sold acquired for business purposes for a specified sum. Purchaser may take a deduction in this return as a record part of such year based on the number of years the lease will return. So, mga taxes man, kung nag-arkila ka, pati yung mga property tax, pinapabayaran sa imo, so that is considered as an expenses under lease agreement. Okay, kung may mga leasehold improvement ka, like for example, you have improved the property, naging arkilahan mo, so still the amount of your improvement can be amortized over the remaining term of the lease or over the life of the improvement. Do depreciation na siya, guys, whichever is shorter. Galing lang, you have to compare the life of your rent, the term of your rent, against the life of the improvement. Kung nanging butang mo improvement, like for example, is building, gamay nga building or gamay nga store, so ang imong estimate, for example, is 10 years na siya magdugay, but ang imo nga lease term is 5 years lang, so you will divide the value of your improvement with 5, not by 10 years, because you will stay in the property of the lessor for 5 years lang. So dapat the depreciation of your leasehold improvement or the amortization will be limited only to 5 years. Take note the period, whichever period is shorter between the life of the improvement and the remaining term of the lease. Okay? Labor training expense. as a deduction from taxable income of one half of the value of training, labor training expense incurred, the skills development and enterprise. Actually, guys, this is new. This is new. This is provided by the Create Law. Bago ni siya. Enrolled in senior high school, public higher educational institution, public educational institution, public technical and vocational institution, and duly covered by an apprenticeship agreement under Presidential Decree 442, Series of 1074, or the Labor Code of the Philippines, shall be granted the enterprise. So, under Create Law, gina-consider ni Grice ang PD 422 kagang Labor Code. So, by considering that, the tax laws provide some additional incentive. So, this is the computation. Okay. The gross sale is 100 million. Okay? Sang business naton, manufacturing ta. Then, ang cost sang aton nga gross sale is this one. If you have cost accounting, you will understand what I'm saying right now. If not, there is two types of cost of sale. One is ang direct material. Amo ni ang materials gid nga na gasto by producing a product ang baligya, which is your sale. So, amo ni siya. Example, if you are manufacturing shoes, so the leather will be your direct materials. Your rubber will also your direct materials. And that cost 3 million in our example. Then next, you have your direct labor. The direct labor is 20 million. So, when you say direct labor, that is the labor incurred or utilized in order to manufacture the shoes nga ginbaligya naton, and we have earned through sales of 100 million. So that is your direct labor. Ang obra sang mga nagapanahi sang sapatos, ang imong laborers, that is what we call direct labor. When we say overhead na 10 million, that is the cost of other materials and expenses that is not directly na makita sa imong sapatos. Like for example, water sa factory, electricity sa factory, depreciation sa mga machineries and equipment na ginagamit sa factory. Those are considered overhead. Okay? So the total cost is 60 million. Then aside from that, there is operating expenses. These are expenses not related directly to the manufacturing of the product. So sa opisina, salary sa mga empleyado, accounting, salary sang taga-sales, taga-marketing, taga-advertising, sweldo nila, that is worth 7 million in our example. Taxes related, 300,000. Then the depreciation of computer used in the office, printer, ano pa na da, electric fan, etc. So the depreciation of that is 3,500,000. Ang depreciation sa machineries nato niya guys, sa sa overhead wala na dire. So professional fees, kung nagapabukit ka, bayad sa auditor, mga legal fees, etc. are considered professional fees, that's 200,000. Then kung ginapa-advertise mo, ang imo nga business, ang imo product, so the advertising or ang bayad sa TV station para i-advertise is 3 million. Then, this is ang atong topic subong, the training expenses, 3 million. So, ang imo nga mga laborers na nag-manufactures ng imo nga sapatos, which is your product, is allowed na magdidaka kung ginapa-train mo na sila sa TESDA or any other accredited mga training providers. So, that's 3 million. The office is supplies of 500. So, in your income statement, the company is earning 17,500,000. Okay? So, based on this illustration, based on Create Law, we can compute your taxable income. This table is for the purpose on the view of taxation naman eh. So, your gross sales of 100, that is 100. Then, the cost of sale of 60, that's 30, 40 plus 10, that's 60. So, your gross income would be 40 million. So, the deduction. So, the total deduction before additional deduction on training expenses is 17,500,000. Are siya? Total expenses kali guys, 17,500,000. Ano? Kita nyo? Okay? So, this is the original expenses, 17,500,000. Then take note, ang naka-red, additional deduction for training expenses. This is our concern in this slide. How to compute your 1,500,000. So this is an additional deduction. So the answer, the taxable income based on this illustration is 21 million. Di niyalin ang where did 1,500,000 came from. That is the application of what we have read earlier. One half of the value of the labor training expense incurred for the skills development of enterprise training enrolled in the following under the laws under Create Law and PD 442. Okay? One half of the value of the labor training expense. So let's go back. What is the labor training expense? 3 million, correct? So one half of it will be an additional training expense. That is an allowance or dugang credit naging hatag sang tax law naton under the laws which under the presidential decree, under the labor code, and supported by the Create Law. Okay? So additional deduction for training expense, that's 3 million. Dari siya, 3 million. Multiply it by the rates nga provide ang hatag, ang bigay ni tax law, one half of additional, that's 50%. So the additional deduction is 1,500,000. Ano siya? 1,500,000. Okay? Okay. Next, the limitation. There is two limitation on actual training expenses to be entitled to an additional deduction of. So that's 20 million. Dinali ng 20 million labor costs given. So that is the direct labor. That's 20 million. So the limitation is 10%. Okay? The limitation is 10%. So multiply it by 10%, the limitation is 20. So you can deduct your training expenses of 1,500,000 if your training expenses na 3 million does not exceed with the limitations of 1,500,000 plus the limitation of 2 million. Sorry, your 1 million additional training expense does not exceed rather with the 2 million limitation. Okay? Dapat hindi ka din mag-exceed sa limitation nga 2 million yung compute natin earlier. So you have to compare this one against this one. Whichever is lower, that would be the allowed additional deduction for training expense. That's 1,500,000. Okay? So next, the additional deduction of 1,500,000 is available, this one. This explanation refers to the 1,500,000 since the actual training expense does not exceed the limit of additional training expense plus 10 does not exceed from this one and this one. Ang training expense kano nga 3 million does not exceed with this one and this one. Okay? So 3,500,000 ang aton nga amount to be tested or to be compared with. Okay? So in short, that's 3,500,000. So your 3 million actual does not exceed with the additional limitation plus limitation on the training on the labor cost. So 1,500,000 plus 2 million, that's 3,500,000 and your actual is 3 million. So in short, pwede mo madugang ang additional training expense ng 1.5 as an additional deduction pa, though free deduction on the part of a manufacturing concern. Next, last is sales discount to senior citizen. Sales discount to senior citizen of 20% is a deduction from gross sale of the seller of goods, thus it will never form part of your deduction from gross income. Okay? Ang 20% guys, it is in the form of sales discount. You should deduct it to the gross sales and not as a deduction from gross income. Sa gross sales mo siya ibuhin na and it will not be considered as an itemized deduction. Please take note. Okay, so this is the conclusion of our discussion on deduction from gross income. So next topic, we will discuss income tax of corporations. Okay, so see you next video. So see you on the next topic, income tax of corporations. Okay, dismiss.